course, we're talking about the major tax bill that's come out of conference. What's your general assessment?
My general assessment.
Is it going to be better for most people?
It's probably going to be better for most people. But I think we're talking really only slightly better, and I'm not thinking so much about tax cuts as just straightening things out a bit and making life a little less complicated. I don't think it's healthy that the government should expect people to be their own accountants and complicate their financial lives with the law, even though the government only complicates people's financial lives as a way of giving them subsidies for doing certain activities. But it makes them worry. I think the most troubling thing to me is wage earning people who don't itemize and constantly worry whether they should. You know, that worry shouldn't be there. They should just be withheld on and file their little Form 1040A every year and forget it.
Tell us, first of all, Lee Sheppard, about your publication.
Tax Notes is a fairly technical publication that is read mostly by lawyers and accountants. We are weekly. We deal with federal tax law largely, but we carry a little bit of every piece of tax information that comes out of the government, which would be federal government and state governments. We have a news section, and that is what I'm associated with.
How have you been covering this conference committee in recent days and weeks?
Hanging around the halls outside the room where your elected representatives are in there behind closed doors making deals.
Mm-hmm. Were you surprised with the deals that came out, with the nature of the compromise when it was finally released?
I don't think anything surprises you in the political deal making. I think the main thing that really surprised or maybe bothered me is sort of the lack of information on which the legislators base their decisions, or the sort of misinformation sometimes, just their own gut perceptions.
Can you explain that a little bit further?
Well, there are things like, you know, there are perceptions that some legislators have, and certainly not all of them have it, like that, for instance, that maybe that IRAs increase national saving, which it's statistically clear that they don't, but there are a lot of legislators that believe that they do, or there are a lot of legislators that believe that they do because it's politically expedient to believe that they do. And when you're dealing with something like taxes, where it's economics, it's messing with the economy, and you know, I just don't think you should be making your decisions on the basis of, well, people like them, so we'll keep doing it.
Is that generally the feeling among experts? We're going to just have to wait and see how this shakes out in the economy?
Yeah, because what happens is the thing about tax subsidies is that they work wonderfully well. And people run out and they change their financial behavior based on them. And when you are doing modeling to figure revenue estimates and to figure, you know, what the effect is going to be on growth or something like that, you have to do a static model. You have to assume that when we repeal one particular corporate rule, you know, let's say we repeal a rule that said a corporation could do a transaction in a certain way and have it not be taxed. When you repeal that rule, the model is going to assume that people are going to go on doing that transaction, or maybe just that they're going to go on doing a little less of it. What the model does not assume is that a lot of bright corporate lawyers in New York are going to figure out a way to do the same transaction in a different form, so that it'll be free of tax. The models can't assume what they call secondary behavioral effects, and so and then there's a lot of in the economy and capital markets. There's also a lot of psychology which you can't assume. I mean, you could have people, you know, thinking that it's going to be good and therefore the market will go up.
Lee Sheppard, your reaction to Mr. Rostenkowski?
Oh, I just love that statement. Actually, what I think we had was in the last week, or actually throughout the negotiations, but especially in the last couple of weeks, we had the Senate coming to the table asking for more, or actually not more, but the preservation of a lot of tax expenditures, subsidies, that is, that we have for various businesses and various natural resource extraction activities like oil and timber. And, you know, they wanted to keep the very generous depreciation schemes we have now, that sort of thing. We had the House coming to the table saying basically that the tax cut for people who make between $50,000 and $200,000, who certainly do not need a tax cut, was not big enough in one of the compromises that the Senate was proposing at midnight. So I think that's sort of Mr. Rosenkowski's view of what was going on.
Can you take what we see now as what's probably going to be the end result, or can his tax accountant and he expect that by the time this bill gets through the floor, it will change again?
I see. Does he think it's going to change on the floor? I wouldn't really predict a lot of changes on the floor. I'd predict a lot of griping on the floor. But if it's going to go, it probably will go as it is.
So tax accountants around the country or personal finance planners can begin
calculating. They can entertain themselves all they want with what they have here.
Is there a hero in the scenario?
Well, I think his perception is right that the little man gets a little bit of a break, and it's kind of a shame that there's a lot of things being done in this bill that are very necessary. It's kind of a shame that it's being sold as an individual tax cut. I don't think I'd sort of point to any heroes in the thing unless you sort of admire people who have great negotiating skills and are able to pick up and carry a bill that was wrecked several times. I mean, it's clear that both Packwood and Rostenkowski did a very skillful job of that. That's a political skill. Income averaging for individuals is going to be eliminated. It will probably be eliminated effective next year, but there isn't income averaging.
What does that basically mean? There's all these estimations, and you've alluded to it. If you're a middle-income wage earner, you're going to fare a little better under this, or should you worry?
Should you worry about one of those charts?
About how your income's going to end up changing under the new tax plan.
You shouldn't worry. I don't think you're going to have anything outrageously noticeable to celebrate, but I don't think there's anything to worry about. If we're going to raise anybody's taxes in this bill, we're going to be raising the taxes of people who are heavily sheltered, although I think if I was a single person, I would worry.
This is a direct quote from someone, because they depended heavily on credit card interest deductions, interest from loans on cars.
Depended heavily. I mean, if you can afford to go out and incur the kind of debt, I mean, you have to have a high income to do that. You have to have a fairly high income to do enough borrowing of non-mortgage type borrowing that it's going to help you itemize. And if we're talking basically sales tax deductions for money spent at Saks. And if, somehow I can't feel terribly sorry for that. The yuppies do get screwed in the sense that two-earner married couples and single people with high incomes get screwed by the nature of the tax cut. Part of the tax cut is being delivered through an enlarged personal exemption, which helps the traditional family. That's the people the Reagan administration wants to favor. That's not most of the people anymore, but that doesn't matter. That's the people the Reagan administration wants to favor. Yeah, basically they're telling you that you can't go out and get another mortgage on the appreciation if you're not going to spend the money on something else they think is a good thing, like medical expenses or tuition expenses or improvements to the home. Because we've got too much tax. See, I can't say this to ordinary people because they'll have fits, but we have too much tax favoritism for single-family housing. We also have too much of our investment capital in the country in single-family housing, and it's a problem. That's why we have no investment in industry.
Okay. Tell us a little bit about yourself. What's your training?
I am a lawyer.
How did you get involved in this business?
I practiced tax law for a while, and I decided I'd rather write about it than do it.
What do you find the most stimulating thing about your job, especially during this last year with so much to do on tax reform and so much to cover?
I like to think about policy, and I like to write about it. I like to be in Washington where there's all sorts of economists and lawyers who think about these things.
Why the kind of publication that you're writing for? It has a fairly limited and very select circulation.
Yeah.
Why not write for a major daily and reach more people about tax reform? Why did you
Well,
make that decision?
I've actually had things appear in daily newspapers. One thing that is nice about Tax Notes is since you are talking to a more sophisticated audience, you can make arguments that you wouldn't be able to make in a daily, because you can assume a lot of knowledge on the part of your reader.
Okay. Another question for you on a small detail. What happens to political contributions?
Oh, political contributions are still there. I think we put something like a limit on giving it to people in your own state or something like that. I think the Democrats tried to do something like that. But as far as I can see, you still have that credit in there.
We kept hearing all last year from the governors around the country who were very concerned that education was going to be affected if we started cutting back on deductions of state taxes. Because this is a compromise, really. They can still deduct income taxes, but not sales tax. Do you see any effect on education, or is it too soon to tell?
The governors are going to sit there and say things like that because it benefits them to say it. What the truth about sales taxes is that sales taxes are going to get paid regardless of whether they're deducted, because less than a quarter of the total volume of sales taxes paid ever gets deducted. It's only very high income people who are able to deduct their sales taxes. The rest of the people just pay them and lump it. And so for a state governor to come in and say, my education is going to be affected if you don't leave the sales tax deduction in, is sort of a non sequitur.
Thank you for being with us.
Thank you.